Welcome to the show today, everyone. Now, we tend to get a little tribal and cling to the limited understanding that we can gather up occasionally when it comes to investing. For the most part, though, we are in it for number go up. What can we invest in today, which will rise in value tomorrow, so that we can have more in the future than what we have right now? And of course, yes, we would all like to think that we're ethical investors too. We're saving the environment and we're fighting social injustice through passive index funds. But hey, we've all eaten that 3 a.m. kebab. We've all chosen the cheaper import rather than the locally produced thing. We've all ignored people until we want something out of them. We're imperfect investors because we're imperfect people. And even when it's all mapped out before us and it makes perfect sense, we still make choices out of fear and greed. We invest based on what groups of people say rather than what we think, and we pursue ends regardless of our purpose. For over 5 years now, I've been talking about Bitcoin on this podcast, and chances are it's probably lost me a little bit of credibility in traditional finance circles, if I'm honest. It's certainly cost me the opportunity of making money out of this podcast, but I can't help it. Popularity, profit, and pandering to preconceived notions, that ain't my style. Cutting through the pretense and having the conversations that can really build wealth for the everyday person in the new world, that's my style. And this involves having conversations with people that I know you might not agree with occasionally, not because they're right, but because it'll help you think for yourself. And that's a skill that's getting a little harder to hone these days. So today, for those who believe Bitcoin is just about making money, there's great news for you, and some bad news too. The Bitcoin ETFs and the halving this year could result in some strong price action. The bad news? If you believe Bitcoin is all about the price action, at some stage you're going to get your face ripped off. Now today I'm having a conversation with Konrad Hurren. He is a Bitcoin economist from the Austrian School of Understanding. And in this episode, which may be slightly above the beginner level for some, we're talking about the Bitcoin Exchange Traded Fund, or ETF, and we're talking about the Bitcoin halving due to occur in April, as well as some of the other things that may affect price over 2024. Now, I should explain a little bit about what an ETF is before we get started. It's an exchange-traded fund. And an exchange-traded fund is a way to invest in a basket or group of investments all at once. You might choose an ETF that's focused all on technology stocks, or small-cap investments, or international shares, or dividend stocks. You name it, there's something for everyone. And instead of going out and buying all the individual investments at once, you just do one purchase and that's it. No need for complicated share registries all over the place and separate tax reports and rebalancing. It's all packaged up into one simple parcel for you. A Bitcoin ETF is even simpler. Instead of investing in a bunch of companies all at once, there's only one thing in there: Bitcoin. No need to set up a digital wallet or set up an account with a crypto retailer. If you like, you could just use an online brokerage and purchase the Bitcoin ETF just like you would an S&P 500 index fund. So why is this a big deal? Well, for the everyday investor interested in money go up, here you can benefit from the price appreciation of Bitcoin without that much complication. Holding 1 to 10% of your portfolio in Bitcoin may improve returns without significantly increasing the volatility. There is solid science behind this statement, of course. Get some financial advice, though, especially if you're seriously considering taking this further. Now, although I personally hold Bitcoin and I trust the science behind it myself, the process of getting a Bitcoin ETF has been a long and arduous one. As you'll hear today, there's more than a few hints that the delays and even purposeful manipulations have all been part of a plan, too. Almost as if traditional finance wants to suppress the true price of Bitcoin for as long as possible. The FTX and Sam Bankman-Fried story, the false announcements coming out of the SEC of an approval, and even the way that the Grayscale Bitcoin Trust is structured from a fees perspective, designed to release Bitcoin constantly into the market during this time, well, it all suggests that traditional finance has only reluctantly welcomed Bitcoin into the fold. Now, in the show notes to this episode are some links to the graphs that we mentioned in this recording and articles that may be useful if you're conducting some of your own due diligence, which of course I'm going to suggest that you do before you get involved with Bitcoin. Now on that, I'd expect mainstream financial advisors to start promoting Bitcoin now that there's a revenue model behind it. I'd also suggest that you're going to see more ads everywhere around Bitcoin ETFs. I'm also going to suggest that you're going to see fund managers all of a sudden trying to make you forget how hard they railed against Bitcoin previously and now they think it's a great idea. They can see the dollar signs, and they trust that you'll see the dollar signs too. If you're looking for more than just number go up though, and with a form of hard money that you can self-custody, I'd very much recommend that you think about this. Well, do consider doing the extra research required to set up your own digital wallet and hold Bitcoin outside of an ETF also. Before we start, apart from leaving a positive review on your podcast player and following me on social media, I'd really appreciate any support that you could offer by using the affiliate codes in the show notes to sign up with Hatch or Sharesies if you want to buy a Bitcoin ETF that way on your online brokerage here in New Zealand, or Easy Crypto if you decide to go the direct route. Let's get started. You're listening into the Everyday Investor Podcast. Passive investing, property investment, managed funds, and crypto. If you're an everyday person wanting to build new wealth for the new world that you're heading into, then this podcast is for you. I'm Darcy Ungaro, your host. I'm a qualified financial advisor, but I'm still learning how to invest better and teach others how to do the same. I talk with guests and cover a range of topics designed to get you to think for yourself here. But please keep in mind, this can't be considered financial advice. Be sure to do your own research here and seek qualified advice of your own before making investment decisions. If you want more information, check out the show notes in your podcast player and make sure that you've subscribed to YouTube also. Then follow the Everyday Investor on all social media channels. The NZ Everyday Investor Podcast receives support from the following partners: Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand; Gorilla Technology, increasing business success through innovative and strategic IT solutions; Ungaro & Co. Financial Advice for everyday people building everyday wealth. Hope you enjoy the show. Let's get started. How are you, Konrad?
I'm very well, thank you, Darcy.
We had a chat way back in June of 2022, I think it was, around Austrian economics, episode 236, if people want to check it out. And today, I'd like to have a chat with you about the Bitcoin Exchange Traded Fund, or ETF, that has just been launched last week. Now, you got into Bitcoin in 2016, so when you saw it, you saw the light, obviously. But what was the initial trigger? Like, what was it? Was it someone, like a friend, that introduced it to you, or how did you kind of stumble across Bitcoin?
I read a book called the Austrian School for Investors, just thinking, how do I invest? Because I recently started my job, and I was, I'm earning a bit of money. How do I invest? What do I do? Do I go see a financial advisor? No, I'll buy a book. Should have gone to talk to Darcy, obviously.
Hey, you're doing it now.
Yeah, do it now. The main thesis of the book is essentially, if you like some sort of financial product or asset, buy it. They start to explain kind of the Austrian business cycle theory and then kind of the origins of money. And I was like, well, isn't this interesting? And then at the end, almost a footnote, they're like, oh, actually, there's this thing called Bitcoin. If you like it, buy it. And I was thinking, well, what you guys have just said about the Austrian business cycle theory and how money works, Bitcoin's just obvious.
It is at that point, isn't it? And
yeah,
I guess like this is something that I've been really appreciating even last week, as I've been studying a little bit more around how the Bitcoin Exchange Traded Fund, or ETF, will potentially change how we interact with Bitcoin in the future. It's actually caused me to have a much deeper appreciation with just how ETFs actually work, like mechanically how they work. And that's just probably one really simple example, I think, of how a study of money itself, or even a study of Bitcoin, if you like, can lead to deeper understanding on all investments. So being a Bitcoiner, in my mind, is a fantastic gateway for a lot of people to understand what investing is.
Sure.
So yeah, let's talk maybe firstly just around supply and demand. So supply and demand, obviously, it's a very fundamental cornerstone, I guess, of economics.
Yeah.
And when we look at these two forces, supply and demand, and price, and we apply it to Bitcoin, it'll probably help a lot of people kind of understand why the price of Bitcoin is what it is. And for the record, at the time of recording, I think we're around about $42,000 US per Bitcoin. Mm-hmm. So let's just maybe unwrap some of the reasons why we're there and start with demand. Why do you think there is demand for Bitcoin?
This is a super interesting question. So there's kind of two ways you can answer this. We can kind of dig up a whole lot of statistics and graphs and things and go through, oh, there's this much money in the world and there's Bitcoin and all that stuff. I feel like the best way I can answer this is to go back to the praxis. Let's understand that humans, when we're making choices, we choose our ends and means. We choose our ends rationally. So we're like, is this end better than this end in a ratio? And then from there, we're like, okay, well, given these ends, what means can I use that will probably get me these ends? And that's a purposeful choice. So it's ends chosen rationally, means chosen purposefully. I'm kind of going into semantics there, but I'm kind of doing that purposely because it's important kind of to understand that sort of reasoning when we're going to talk about demand for Bitcoin. So applying that kind of framework to Bitcoin specifically, one hypothesis or one way to reason through it could be that, the end we as humans have in mind, or at least some of us, is that we want to consume today. Obviously, we need to eat, we need to live in a house right now, but also we know that we live for some extended period of time, and so we also want to consume tomorrow, we want to consume next year, we want to consume in the year 2030. Given that, how do we create things today that will allow us to consume in those days, the future days? If we take it right back to the most simple economy, then we're going to have a person on an island. Maybe they've got some berries, and maybe they'll literally pick those berries today and say, I'm going to eat half today, half tomorrow. That's just plain savings. A more complicated economy, like the real world, is we can create really cool things like podcasts, computers, whatever we're creating is valuable, be rewarded for selling those things with money, and then hold that money as savings for today, tomorrow, 2030. So it's kind of the end we're after. Then we need to choose by what means we're going to do that. We have so many different choices. We have shares, we have bonds, we have cash, all sorts of different financial products. We have houses, cars, all those sort of things. Then we also have Bitcoin. So I guess from my perspective, when I'm choosing my means to get my end, which is to consume in future, my means, the things I'm going to be looking at is it in fixed supply, or can someone counterfeit it? Is it useful to me? Like, can I just pick it up and use it in some easy way? I'm going to be looking for, all those technical aspects of Bitcoin, essentially. Or I might think, well, I can also secure my future consumption by buying a house, which is a common decision as well. So I feel like there are many people in the world who are making that choice, either between any sort of asset, or Bitcoin, or a house, or whatever. And kind of the demand for Bitcoin comes from that need to have a vehicle for savings. This is abstracting away from the economics logic now. This is kind of a sociological fact. In the modern world, kind of millennial generation, me and below, essentially, we're completely locked out of houses, apart from if our parents give us money or pass away. So essentially the choice is no longer between assets and houses and Bitcoin. It's kind of just like, it's only Bitcoin. Or kind of more degenerately, people are getting so desperate that they're buying dog coins and NFTs. The reasoning is because they need a way to shift their purchasing power from today to tomorrow.
So these people, and when we say these people, the people that understand, humans, or specifically the subset of humans that understand what Bitcoin is, to the extent that they would part with their fiat currency for it. They have searched around all the avenues. Potentially they feel locked out of the property market or other traditional methods of investing or assets. And they've decided, I guess, on aggregate that this is the best asset class to be in for all of the reasons like limited supply, lack of government control, open, honest ledger, all that sort of stuff. The more you learn about Bitcoin, obviously, the more you appreciate these things, the more faith that you could therefore put in it. So from an individual basis, the faith that you have in Bitcoin will dictate how much of your net worth you would be willing to put into it. But I guess when we think about all of the people and the varying degrees of knowledge that they might have with Bitcoin, they might be at very different levels. So how much do you think that people's understanding around Bitcoin actually drives the price of it?
First-hand experiences was talking to other Bitcoiners. When we first buy Bitcoin, buying $100 worth or whatever it is, you're really scared. You buy the Bitcoin, send it to an address generated by a private key that you control. And the first time it's scary. You don't know if it's going to work. Maybe it's a leap of faith. It is going to work, of course. You honestly don't know that it is. And at that point, you're buying small amounts, really tentatively. And maybe if you make another couple of transactions and you realize that it will always work, you feel this burst of confidence. You're like, okay, I'm just going to buy Bitcoin and send it to an address I control. And that just becomes really easy. And then you go on X and become a Bitcoin maxi and put your laser eyes on and make memes. So I think individually, certainly your individual demand for Bitcoin increases exponentially as you understand it more.
People's understanding and their appreciation of what Bitcoin actually is presumably will increase, and therefore the demand side might increase more because they're getting a broader education, not just from their direct experience, but they might see that, hey, their financial advisor is starting to talk about it now. And hey, these massive companies are starting to hold it on their balance sheet that never did before. And even my KiwiSaver is allowing me to get access to it. So do you think that kind of broader reinforcement will really stoke the fires of demand for Bitcoin?
I'm going to say no, actually.
Okay.
If we look at other ETFs, say we look at an ETF of palladium or an ETF of precious metals, there aren't many people in the world who would say, oh, there's an ETF of palladium or other precious metals, I'm going to learn more about those metals. Very few people can tell you what they are or tell you what they're used for or tell you where the demand for those metals comes from. I feel like the ETF will have an effect on price two ways, two opposing directions. So first of all, like ETFs are useful just because another financial product that helps you kind of arbitrage differences in information between time, between people, whatever. And so that's always going to be useful. So a Bitcoin ETF isn't really special in that regard, but a Bitcoin ETF kind of gives traders and investors access to the price movements of Bitcoin without having to custody their own Bitcoin. It also gives you access to more liquidity, which is a silly word really, but like it's just very, very easy to sell your ETF. It's pretty difficult actually to sell your Bitcoin peer-to-peer. You can sell on an exchange, that's easy, that's solved, but peer-to-peer is a little bit more difficult, a bit more technical learning required, a bit more risk, a bit more self-awareness, understanding is required. There's those advantages. But as far as the differences between a Bitcoin ETF and any other ETF, I think they're very much surface level. ETFs are, to me, a valuable product that solves a very specific problem, and they're kind of all the same.
Okay.
I mean, the things they're trading aren't the same, but the ETF exists for the same reason.
But just as it relates to demand in particular, like assuming there's a certain degree of a certain amount of overall, say, institutional demand, how much of a factor do you think that's going to be in terms of driving the Bitcoin price?
I think it'll be large. I think as different traders think, I need to balance my portfolio in such a way that the price movements of Bitcoin suit me, then I'm going to buy this ETF. And then that does translate to Bitcoin bought on the market because ETFs are governed by complicated rules. I did a bit of reading into how it works. There's a lot of different audit requirements, reporting requirements. Interestingly, those are all imperfect. They work, but they're imperfect. And so to the extent that they're imperfect, then the ETF will actually create what you could call paper Bitcoin. It will inflate the supply of Bitcoin. It won't inflate the supply of actual Bitcoin on the network, but it will inflate the supply available to the market. There'll be an attenuation on price. Whether or not we actually see that is a different story, because we see the results of all the different trades. We don't see all the forces acting individually. But all else equal, there would be an attenuation in price.
Going back to what we were talking about in terms of demand and how, say, the education or one's experience with Bitcoin can sometimes drive the demand because it amplifies their faith in Bitcoin as an asset. With this ETF exposure now, through media and stuff like that, more people talking about it, you don't feel that will necessarily increase demand for Bitcoin because of that? You don't see that being a major factor?
I don't know, because for the last 15 years, the media's been talking about Bitcoin, and it's only people who want to Google it more and learn a bit more. There will be an effect, but it won't be large. They're not all going to come running like, oh my God, there's ETF.
Yeah. we're now almost a week into it at the time of recording, and it certainly hasn't gone crazy. And a lot of people would point out the fact that there's the Grayscale Bitcoin Trust and that influence of new supply as people move out of one vehicle into another vehicle. That's kind of explaining a lot of the volume, but it's not necessarily indicative yet of massive increase in demand. And so I think that might take time, right? So
it will.
Yeah. Okay. So now just talk about a little bit on the supply side a little bit before we go too much further. How much weight do you place on the Bitcoin halving event? So in 3 months' time, the block reward, or the reward that miners get for maintaining the Bitcoin network, that will halve. And so that means less new supply of Bitcoin, which is finite, but less new supply of Bitcoin until it reaches its limit, decreases by half. How much is that going to affect the price of Bitcoin?
I feel like that's going to be the main effect. The halving is a really, really technical concept. Not many people understand it, least of all Bitcoiners. Every 10 minutes, a new block is mined, and a nonce is found that matches the right number. And the miner who finds it is rewarded with what's called the coin base. It's the block reward plus the fees. There's an equation in the Bitcoin code that governs that. So the block reward currently is at 6.25 Bitcoin, and that will be halved down to 3.125 in early April sometime. In terms of the economics of it, it's very simple. Like, holding all else equal, as we always do, it's just a violent leftward shift of the supply curve. And so that's, holding all else equal, that will push up the price. It has every other halving, and I think this one will be the same.
Okay. Another school of thought as well that I want to get your feedback on, which is the correlation between the halving cycle, which is every 4 years, and global liquidity, or the changes in, I'm going to butcher this, but the changes in the supply of available money out there chasing investments. That kind of moves in cycles as well, which is approximately 4 years too, or 3 to 5 years.
Yeah.
And I know Raoul Pal, a fairly well-known macroeconomist, he kind of talks about this in his Everything Code, where everything like election cycles, the liquidity cycle, and the Bitcoin halving, they're kind of all in the same sort of sequence. So we have this resonance that's going on. Do you put much weight on that in terms of, hey, there just happens to be a lot more money around at that same point of time, so that explains the price action of Bitcoin during the halving cycle rather than the supply of new Bitcoin? What's your thoughts on that?
I don't think it's a rather than, but definitely it adds to it, definitely. And certainly in the past 4 years, we've seen just a ridiculous amount of money creation. So there's no shortage of liquidity that can flow into Bitcoin.
Yeah,
I think one way to think about Bitcoin price is Knut Svanholm has written, it's everything divided by 21 million. That's the price. It's actually quite an uplifting message. It's like, if you believe that humans are going to continue to become more productive, better, if you believe that, then the Bitcoin price will continue to increase.
Right. So ultimately, if you're an optimist around our future, if we're going to a life of abundance where technology makes everything cheaper, then the price of Bitcoin in the long term will be infinite, right?
Yeah, well,
cool. Yeah, we want to be optimistic today, right? Surely.
Of course.
Yeah. So in terms of there's one sort of objection that I want to kind of bring up at this point. When we're talking about supply and demand and therefore the price of Bitcoin, a lot of commentators would suggest that the price of Bitcoin is manipulated, that there's a lot of whales that are out there that are gobbling it up, and they're issuing some fear, uncertainty, and some doubt, some FUD every now and then to dump the price so they can get in there and get it at a lower price. And I'm sure this occurs, but in your view, relative to the demand and supply for other mainstream assets, which are pretty much a function of central bank intervention at times, is it really fair to say that the Bitcoin price is actually manipulated, or more manipulated than other mainstream assets?
I don't think it's fair to say more manipulated. I think it's interesting to look at the different manipulation. So if we look at other assets, so if we look at residential housing, you've got manipulation by central banks, as well as manipulation by local governments, as well as building codes, things, all that sort of manipulation. There's that manipulation in that market, which kind of maybe you could say it equals the whales in Bitcoin. You've got manipulation all over the other financial markets, like in shares. Different companies will do share buybacks, and they're allowed to do this. It's legal, and it's not always manipulation. Sometimes it's hard to draw the lines. So, share buybacks, or they'll issue new shares for good reasons or for manipulation reasons. But where Bitcoin really differs is kind of historically what we saw during 2021 with FTX. In my opinion, FTX was kind of allowed to continue their fraudulent rehypothecation of investor funds, which created an enormous amount of paper Bitcoin, which I mentioned before. I guess, we were due to have a huge bull run in 2021, given the monetary expansion that occurred post-pandemic. And that was stopped by FTX. If you're thinking through the incentives of different actors, that was probably on purpose. So that certainly happened. FTX kind of was set up to stop that bull run. In our local Bitcoin group, we've been discussing how that effect might mean that this Bitcoin bull run might be really large, because I guess we were owed that bull run. And so there's all that pent up bull run ready, I guess, that wasn't allowed to happen. So now it's going to happen with this next halving, perhaps.
It's an interesting perspective. To be honest, it's probably not a view that I've heard that much. So basically what you're saying is that the FTX saga was allowed or permitted, or dare I say even engineered, to go on for quite some time, so that it would artificially kind of feed the demand that there was at Bitcoin, which kept the price action subdued. Mm-hmm. And it was just a way to kind of buy some time. Is that kind of the underlying theory?
I think so. Yeah, it was to buy some time, because as Rob Paul said, the Bitcoin halving, he's saying it in a very, very acceptable way, right? He's like, it's all synced up, and yes, the Bitcoin halving happens in the exact same year as the US elections, which I guess is kind of, unfortunately, maybe the most important election in the world. And so that happens every 4 years. And certainly 2016, Bitcoin was still pretty small. But 2020, we had the pandemic and then the election, and Bitcoin kind of the price had fallen off a cliff at that point. People thought it was the end of the world. They were selling everything. That was really weird. But I guess coming into this election cycle and this halving, what happens? Like, we're really due for this huge Bitcoin bull run. Is that going to be acceptable for that election cycle? Very nice.
Yeah, it's going to be fireworks, right? Okay, so let's talk more about this Bitcoin ETF. When we talk about the Bitcoin ETF, how would we highlight the problem to a non-Bitcoiner that Bitcoiners do have, which is the complexity around self-custody? And therefore, how do we then explain how the Bitcoin ETF could potentially help them to gain some exposure to the price action of Bitcoin?
I guess we could tell the story, or come up with a really simple metaphor of how Bitcoin works, so that we can get past this idea that self-custody is that difficult, right? So Bitcoin fundamentally is a messaging protocol. I hear knocks on the door with a lot of maxis saying you're saying it wrong. No, whatever. I reserve the right to be wrong here. And this is completely correct. But it is a messaging protocol. And essentially what we're doing, the way I think of it, is we're sending each other checks, like bank checks. It says, pay this person 10,000 something. And I'm signing it literally with my name, like signing it. And so Bitcoin is essentially like a big long page, or like strung together, taped together, just a whole lot of checks that say, pay this person pays this person, signed. This person pays this person, signed. And so from that, either you can solve that either by going to the bank and going, okay, can you just sort this all out and then give us the money? Or you can say, well, actually, we have a record. Like, let's ignore the bank and just use the record and say, okay, I've paid Lisa $10 and Lisa and Sam paid me $5. My balance must be, say, 5, right? Just on balance. And then, so kind of the Bitcoin protocol solves all that. And so the idea of this signature, like, as long as you can sign your message, you can figure out every transaction that is yours. And so the idea of self-custody in that world would be, I'm just going to hold my signature, which is kind of trivial, right? Like, we all know how to sign our name. But that only works in a really high trust world. So in kind of the lower trust world we actually live in, maybe we invent some or we discover some clever mathematics called cryptography, and we come up with a way that actually we can store this number that can derive a signature that does the same thing as signing our name. And then all self-custody is kind of breaking it down is, can you keep this number away from everyone else? Like, can you build a moat? Can you put it in a bank vault? Whatever you want to do, just keep it away from everyone else. And that's all self-custody is. Because I guess we've solved the security problem in cyberspace, and it's self-custody is about solving the security in meat space.
Got it. In the meat space. Yeah. And so the problem then that the exchange traded fund aims to solve isn't actually that difficult, but for some people it is. And this is something where I have been talking for 5 years now with my clients as a financial advisor around Bitcoin and helping people to get comfortable and how to view it as just a valid component in their own portfolio. But when it comes to actually going out there and doing it, a lot of people do feel reluctant with downloading and setting up a wallet correctly and then setting up an account with an exchange and going ahead and buying it. So that's where I guess these exchange traded funds come in really, really handy. So yeah, so like if you weren't as educated with Bitcoin as you are, would you see value in these Bitcoin ETFs?
I think I would, in terms of how the price of Bitcoin moves. As I said before, like ETFs are useful because if they provide arbitrage opportunities for information, or they just help information be more distributed around any sort of market. And if your portfolio needs that specific movement or that specific risk type, then it's great for you. Yeah, so ETFs do have their value, definitely. And for kind of the everyday investor thinking, I want to be exposed to Bitcoin price action, ETF's fine. You don't have to self-custody. You probably should by 2030 get some Bitcoin, but before then, just buy your ETF. It's fine.
Yeah. I think the vast majority of investors are looking for number go up, right? They're looking for the financial benefit of Bitcoin adoption. They're not necessarily looking at the value that Bitcoin as a medium of exchange can have, which is what you can really only appreciate if you are self-custodying. For sure. And it's kind of like, whatever, we'll start there. But, ideally people will learn more. And then I guess as their tastes get more honed, they will migrate. Like, do you kind of see that as a possibility that people might use the ETF as a gateway and then eventually learn more about Bitcoin and then want to self-custody later on?
I'm hoping so. I don't have high hopes that it will be a huge number of people, but I'm hoping at least some do.
Yeah.
I'm hoping that as self-custody becomes easier and easier, which there's many different projects going on which are making it so, it will just become obvious and people will, oh, okay, I've got this ETF. I'm looking at the world a bit more adversarially now. Maybe I have less rose-tinted glasses for the world. Okay, I'm going to hold some Bitcoin by 2030. Make sure I have some.
Got it. You keep mentioning 2030, Konrad. Makes me think you think something's up.
There's obviously something up. It's the Sustainable Development Goals.
Yeah, that's right.
So if they're telling us 2030, that's the goal. That's our our goal.
Yeah, no, that's a good way of putting it. All right, let's talk a little bit about Larry Fink, because I watched this clip on X. I think it was a few days ago, and he was on CNBC talking about Bitcoin. And Larry Fink, who heads up BlackRock, which is, I think, if not the largest, one of the largest fund managers in the world, he says that he's been a believer in Bitcoin for about 2 years now, and he believes it's an asset class that can, quote unquote, protect you and act as an alternative form of wealth. And he says, we believe that ETFs are the technology that's going to transform every asset class, but ETFs are step one in the technological revolution of the financial market. Step two is going to be the tokenization of every single financial asset. So what do you think he's saying that mainstream investors might be missing, especially as it relates to Bitcoin, but other investments? Like when he talks about the tokenization of every single financial asset, what do you think he's talking about?
So I think you had Brian Ventura from the Blockchain NZ on your show, who was talking about the tokenization of assets.
Yeah.
And so this is a narrative where some people rightly kind of unpick that the legacy financial world is incredibly messy, to say the least. But there's just so many different products, different regulations, but not just regulations, like different mechanisms we use to trade these financial products, to distribute information, to custody, if that is, I guess you custody shares, kind of. But there's different ways we solve all these problems. It's developed in such a way that it's all tacked onto each other, right? It's very messy and works, but it's very expensive. There's a lot of inefficiencies that are very hard to describe and hard to understand. And so I get this idea of tokenization of assets is like, well, we know the way Bitcoin works. We know that this data structure can be used to solve many of those problems much cheaper. And so there's a lot of value to be gained in solving those problems in a cheaper way. And that's the tokenization of assets. I'm much more bearish with regards to the tokenization of assets, because fundamentally you probably don't need a blockchain and you probably don't need a token, just because if you haven't solved the counterparty risk, which you haven't with assets, because if you've got a token that says you own a house, well, actually you still need to go get the house. Whereas if you own Bitcoin, you literally own Bitcoin. There's always going to be counterparty risk with any other asset that any token represents. And so if you still have to solve the counterparty problem, then you haven't solved the biggest problem.
That's the thing that I keep on coming back to as well, but you articulated that really well, because I've kind of, in my mind, I think, well, we have a real world asset, let's say it's a car, and then you have a token on a blockchain, which represents the ownership of that car. Obviously, as soon as it's a token on the blockchain, super efficient to change the ownership, but there still has to be a connection from the digital realm to the physical realm. And the thing with Bitcoin is that it's digitally native. And so, of course, it makes sense. It's congruent. But as soon as we have this mix of digital and physical, we still need some sort of bridge. And therefore, you're kind of saying here, correct me if I'm wrong, but it's like a solution in need of a problem, really, beyond a certain point, right?
Yeah, it is. And certainly, I do reiterate that, like, we do have data structures and technology available now that we can kind of rebuild a lot of the financial system and make it much more efficient. But do we need a token, and do we need a blockchain? I don't know.
Interesting. Okay. Well, that's one of the things like this year that I want to chew into more, is the real world assets, or RWA. I want to get into that a little bit more just to fully get it, because it kind of almost feels in the sense that it's like what NFTs were a couple of years ago. I know there's different iterations of this through each cycle. There's a different manifestation of what NFTs are and different use cases, perhaps. Maybe that's the same with RWAs. I don't know.
Maybe.
Your views, though, just around this Bitcoin ETF, again, around how it was launched. The SEC, the Securities and Exchange Commission, we have this character named Gary Gensler, who some would say he's half lizard, half human. There was a post on the SEC website saying they had approved the Bitcoin ETF, and then it just disappeared. And then there was this tweet which was blamed on somebody having access to their account, which they shouldn't have, and that nothing was real. So there's a flip-flopping back and forth. Do you think that this has been handled a little bit better, Konrad?
I don't believe they were hacked. Right. Yes, I have a very adversarial mind, and to me, and just my opinion, I don't have any evidence, but to me that was a manipulation tactic. I would do that certainly if I was in their shoes. So I feel like it wasn't organic, so there was no hack, in my opinion.
Okay.
It was very fun to watch.
Yeah, it was really fun to watch.
Because especially, they're like, oh, we're the SEC, we protect your assets, we protect custody of all your things, and oh, we can't do two-factor authentication.
No. And then they go
ridiculous, man.
Yeah, there were some fantastic memes around that. But, we're here to keep you safe. Don't worry, we're from the government. We're here to help, right? All right. So Konrad, like, this is an audio podcast, so you can't see this, but we've got open a graph of M2 money supply. I'll put a link in the show notes if people want to have a look at them for themselves.
Cool.
But again, this is a picture of all the money kind of floating out there in the universe. It kind of peaked out here in April of 2022, and then there was slight contraction in the M2 money supply. And at the moment, it seems to be it's kind of just bubbling along. What's your views on this, and what is this graph telling us?
So what this is telling us is, if we look back at the 2020 and we have a We had the pandemic, and then the response to the pandemic, and then the monetary response to the pandemic, which was, let's create a whole bunch of new money through quantitative easing. Every central bank followed suit. Let's push down the interest rates, try and fix the economy before it breaks. But anyway, so that just created a whole lot of new money. And that new money, I guess, is kind of what you could think of as liquidity. To me, this M2 story is really quite simple. It's just there's a lot more money existing. We can kind of wave our hands a bit and say that even though the Fed does conduct reverse repo movements and use those sort of policies to kind of control the excess money they've created from entering the market, they claim they've got complete control over that. Wave our hands a bit and say, okay, sure. But basically it's showing, as we move up, through 2020, huge gaps up, essentially, grows really fast up until 2022. And then kind of mid-year 2022 levels off, and then the money supply begins to shrink a bit. And it's actually that shrinking at the moment, which is coinciding with the global economy kind of starting to turn around a little bit. It's also coinciding with the yield curve, which inverted in 2022.
From March 2020, it starts to really take a quantum leap up. And then since middle of 2022, it starts to contract, which is like rare to see a contraction in M2. But if we were to draw a trend line that just kind of went on pause in March 2020 and then connect the dots up, we're kind of back on trend line, right? Like it's kind of now at that normal growth rate. It's kind of hooking up again to what the rate of growth and credit growth would be normally. Would that be fair to say?
I think so. Yeah, and that's kind of the result of the Fed thinking that things are returning to normal, or trying to force things back to normal. The statistics look good, and we've got a high inflation environment. And so when I say that, I'm kind of segueing into this new graph you pulled up, which is the yield curve, very often cited piece of data. Essentially, the way I interpret a yield curve in an unhampered economy or a free market, the yield curve would probably be pretty flat, just because if it's not, then there would be arbitrage opportunities between longer and shorter term loans. And if there are arbitrage opportunities, people will take them. So it'll probably be pretty flat. But it's actually inverted, which means that investors are picking the Fed to start tightening interest rates soonish. That's been an accurate kind of assessment and prediction ever since the 1950s.
So we're looking at a graph here, which is the 10-year minus the 2-year treasuries. And when it's negative or below zero, that tells us we have a negative yield curve. When this number, which is currently still negative, but it's really close to approaching zero, when it hits zero, we've got a flat yield curve. And then when it goes positive. So what is the yield curve telling us right now?
The yield curve is basically telling us right now that 2022 is the signal that there is going to be a recession/depression, within the next few years.
So you're saying 2022 or 2024?
Well, it was 2022 when it first happened. Yeah. And so at that point, it's like, okay, within the next few years, there'll be a significant crash or correction. Yeah. So maybe we're expecting a crash.
Got it. Okay. So what this graph is telling us is that we're probably on the outer limit of the validity of what this signal is telling us, because we've been negative for quite some time. But it's like, it's either now or never, right? Is that kind of what it's telling us?
I wouldn't say that. I think that the signal is very much, it's a very, very, very leading indicator. It's, when I say within the next few years, it's up to like 5 or 6 years. It's okay. Investors are expecting the Fed to kind of hike interest rates. When they do that specifically is more a matter of politics than it is of economics.
And when they
leading indicator.
Right. And so when you say hike interest rates, we're talking about more than what we've seen over the last. Okay. So what are you suggesting in terms of what we could see over the next little while?
I try not to make numeric estimates of those sort of things. It's just, it will increase most likely. We've also got the incentives, and the game being played by the ECB versus the Fed, and they're hiking and cutting, etc. I think we will see significant hikes.
So you're in the camp of higher for longer, definitely then.
Definitely. Yeah, for sure.
Okay. And that's good. I think like often it's really hard for people to get this, but not only is it really important to kind of make a call and then attribute a time frame around that call, but it's also really important to keep two opposite truths in tension with all the time. And you don't have to necessarily believe it, but you have to understand that there's an anchor to the opposite side of this story, right? So a lot of people are saying, a lot of mainstream economists, especially here in New Zealand, are, yep, interest rates are falling this year. I oscillate myself all the time between higher for longer and lower and sooner. And so this is kind of like challenging for me to hear this, but you're kind of saying, hey, with the inversion on the 10-2 here, like this is kind of screaming at us that we have the contraction in M2. And then we have the China story. I don't know how much of this you've been following, but from what I can understand anyway, there's a lot of shakeups going on in the financial space and even in the military space. A lot of speculation picking up that due to the distraction that the U.S. is currently enduring in terms of these multi-fronts that they seem to be getting entangled in, the Chinese might make a move on Taiwan shortly. And often that is the natural response when there's a lot of internal turmoil, including really rough economic conditions, which seems to be the story that's coming out of China right now, is that there's a lot of tough times going on. Any general views on what's happening in China?
For the short-term stuff, I don't pay much attention to it, but kind of over the long term, I'm kind of a China bear in terms of the population pyramid there doesn't look so healthy. I mean, it doesn't look healthy in any Western country either. I do believe the commonly said phrase, China will probably get old before it gets rich. It's coming up to a time when if they're going to make a large military move, they should do it now, because if they wait 10 years, they might not have the army to do it, unless there's significant advances in robotics and AI. But then they might not be rich enough to afford that. It's kind of now or never.
Not that we're saying, hey, go ahead, China, go ahead and do it.
No, hell no. Please don't. Like, be nice.
Yeah, but it's certainly, it sounds interesting. And so, like, bringing this back to Bitcoin, if there is a downturn in the global economy, which there appears to, like, that seems to be happening for multiple reasons in multiple arenas, what kind of influence will that have on the price of Bitcoin?
I think historically we've seen that Bitcoin does just exhibit those same market moves that we see with every other asset, just because everything's correlated. So we'll see the price kind of attenuate because of those reasons, and maybe we'll see a large sell-off if something silly happens like 2020. We saw people just, oh my god, it's the end of the world. I'm literally selling all my assets, and Bitcoin went from like 20k down to 3k or whatever it was. That probably won't happen ever again, but it could.
Yeah.
So short term we might see some corrections. Certainly not any time close to the halving. We're going to see a huge correction upwards.
Often we look at the word correction in the negative context, but the correction actually could be a correction in the positive, right?
Yeah, it can be. Because the idea is assets are mispriced if they're too high. Well, Bitcoin is mispriced if it's too low.
And it's just a matter of that information kind of being evenly distributed so that the market can respond.
For sure.
Okay. All right. So like on one side, we have a lot of stuff happening on the demand side for Bitcoin. So we have the Bitcoin halving that's coming up this year in about 3 months' time. We have the ETFs, which have a lot of volume going through them right now. Even removing the grayscale stuff, there still seems to be a lot of volume. It could take a while for that to flow through. We saw that with the gold ETFs when they were launched, up to 12 months later, I think it was, before you really saw inflows really, and it was a pretty consistent increase in price shortly afterwards. So maybe that's a story with Bitcoin as well. Who knows? On the negative side, in terms of demand, I guess sentiment is going to be driven a lot by what's happening with global markets. If I was to speculate just on global recession and what that means with global money supply, would it be fair to say that the natural response, if there was a global recession, would be a lot more new liquidity entering the world? Like there would be a lot more cash in the system, wouldn't there?
Yeah, for sure. So as soon as we see a significant downturn, I think the Fed will probably be forced to increase the money supply again, and so will all the other central banks. Yeah. Although there are some games between the ECB and the Fed.
There's some complicated games in the short term, but maybe in the long term, it could be fair to say that the money printers are going to be going burr pretty quick. Not pretty quick, but pretty intensely. And that is very, very highly correlated to the price of Bitcoin, because usually when there's a lot of money in like infinite supply, it finds itself into higher risk assets, and Bitcoin is one of those ones.
Exactly. It's the means and ends, like I was talking about at the start. It's the end we want is that we want to save something for future consumption, and the means we choose is something better than cash.
That's fantastic. That's probably a really good way to finish it. In the notes that I'm going to link to in the show notes here, we've got a few graphs that people can have a look at. Definitely recommend it. It's not difficult to look at a picture and get a feel for what this means and what we've been talking about. There's also a link to a really handy guide, how to set up a Bitcoin wallet and buy your first Bitcoin for beginners. Very much would recommend that. So I'll put that in the notes. A reminder that our sponsor to this podcast is Easy Crypto. So please do use the affiliate code to sign up with Easy Crypto. If you want to buy and hold Bitcoin directly and you've done your own research, make sure that you practice safe custody though. So that's really important. Any final words of wisdom that you want to leave us with, Konrad?
I guess if you ever have any questions about Bitcoin, what it is, how to hold it, whatever, just reach out to someone on LinkedIn like me. I'm the best to get hold of me is on LinkedIn, or reach out to someone on Twitter. Just tweet out, how does Bitcoin work? Someone will find you.
Yeah. And the scammers will find you too, by the way. Yeah, but you'll be able to spot them because they usually have like the prettiest profile picture and only 4 followers. And yeah, you get used to that after a while.
Yeah, or come to a local Bitcoin meetup. We have them in Wellington every couple of months. Couple opening in Auckland. Yeah.
Okay. How can people find the local Bitcoin meetups? What's the best way for people to find them?
We're still trying to figure out how to do this, but I think the best way would be to go to the website, which I've given you the link to for the how to buy your first Bitcoin.
Yes.
And on the bottom somewhere, there's a link to a Telegram.
Yes.
And that Telegram group, there's a bit of information in there on how to find the meetups. As we kind of figure out what's best to do in the meetup scene, those will open up a lot more.
Okay.
Maybe a lot more public.
I've never been to a meetup myself. It kind of sounds like a hookup, but way more financial.
That's good. Yeah, no, it's just Bitcoin. Let's talk about Bitcoin.
Thank you very much, Konrad. Really appreciate your time today.
Thank you, Darcy. It was fun.
All right. Have a good one.
You too.
Thanks for listening into the Everyday Investor Podcast. Like what you've heard, but you want more? Make sure that you've subscribed to our YouTube channel and subscribe to the Everyday Investor newsletter too. The links for everything are found in the show notes that you can access easily by swiping or tapping over the cover art in your podcast player. If you received value in some way, I'd love it if you could take the time to write a review wherever you listen to podcasts. Share it with a friend, or think of our show partners where appropriate. Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand. Gorilla Technology, increasing business success through innovative and strategic IT solutions. And Ungaro & Co. Financial advice for everyday people building everyday wealth. Remember, some investments or strategies discussed on these episodes may result in financial loss. Be sure to do your own research and ideally seek qualified advice of your own before making investment decisions. Hope you enjoyed today's episode, and we'll catch you next time around.